presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to John in Orlando. John, what's going on, brother?
Good afternoon, Tom. How are you?
I'm doing great, man. Yourself?
Good. I'm going to tell you, I've been listening to you since your radio days back in '99. Appreciate what you guys do. But what I really enjoy that you brought back Tim Ord. This guy is as smart as a whip.
I am so happy for that feedback.
Yeah, because he's one of a kind. He's got to be the number one market timer. I'm telling you, it's like he calls it really good.
He does. I really appreciate the feedback, man.
Yes.
Now, Tom O'Brien.
What's going on, everybody? This is Jacob Shoup. You're watching the Tom O'Brien Show. I hope you all are having a fantastic day. What a day in the market overall. We're going to have Steve Rhodes on today. Very much looking forward to hearing his analysis. I mean, this is just some unbelievable movement right now. Most of the volatility was in the first 30 minutes of trading roughly, and we've kind of petered out. You're trading now off 0.41%. You did have consumer credit numbers come out, and while revolving credit's ticking up about 0.1%, you had non-revolving ticking off about 0.3%. So, I mean, that overall contraction, I mean, that's contracting economic activity to some certain extent. And this is a thing that, we've been bringing up on this show. My major concern for the market is something like a little bit stagflationary, right? I think there are still inflationary pressures. I think that the Fed indicated that on Friday, that they were not going to bring down interest rates, even with that 10-year really, in reality, faking to the downside in quite a way. I mean, I think the 10-year now is back up at like 4.2 or something like that. Give me one moment here. Sorry, 4.145%. So, I mean, this is some big swings in the Treasury yield. You had Bill Ackman come out yesterday and accuse Lutnick of basically shorting America because he was long 10 years. We've been talking about that on here. You had Elon Musk talk about the 10 years. You had Trump talk about the 10 years. Besant talk about the 10 years. They want these interest rates to come down. The whole sentiment shift today has been very bizarre because over the entire weekend, a lot of the proponents of everything going on have been saying, this is all part of the plan. You crash the stock market, pull liquidity out of equities, you pump that into the 10-year, and it comes down and you get to refinance at lower rates, right? Again, that's something we were considering Trump was going to do for maybe a month and a half now. And now that it's switched and you've seen such a massive swing to the upside in the SPY, I mean, you're still off 0.6%, but I mean, we were off nearly 6% in the morning. Yeah, and this was insane. We'll talk about this. The point being is what is the narrative for any of this, right? And, this is not me saying that the plan will work or whatever it is, but I don't think that, the big influencers within this kind of arena of stock analysis know what the narrative is whatsoever. Because I've seen it flip. So now it's no longer about the 10-year yield coming down. This was all just a blip, and it was used as a negotiation tactic. Obviously, you had, but again, that doesn't make any sense with what the narrative was. And really, if you believe Trump is trying to bring back manufacturing to the U.S., you don't sign deals, right? Maybe in the future you do. Whatever these deals will be, he wants to bring the factories back. He wants to bring industry back. It is going to permanently change the face of how we've been doing things for quite a while. So you get this massive run-up, and it seems like it's on the news, posted by a guy who his handle is Walter Bloomberg, or at least his screen name is on Twitter. This is the only source I could really find, like the first one. Essentially that Trump was going to delay tariffs 90 days. That was false. Additionally, you could see the attempt earlier in the morning with saying van der Leyen is ready for zero tariffs. That was something they spoke about a while ago. Van der Leyen did reiterate that they're willing to discuss more, But then she levies, about a 26% tariff due May 19th. So, this news cycle is insane. Whatever manipulation was occurring here, this is a $3 trillion movement to the upside from the lows up to 523.17. And then you lose nearly just as much on the swing back down. And now we're going further red at 0.79%. So my question is, why even try to have some, long-term exposure here? I mean, you could scalp, who knows, but if you're getting just straight up lies in the media that are moving these equities to the upside, I mean, that's kind of strange, It's not strange, it's bizarre. And, this concept is terrifying, right? I mean, I remember, if you guys remember, maybe in 2022, I was actually filling in for Tom when we were back at the old office, and there was a Twitter post that showed the Pentagon on fire, like an explosion had happened. And this is actually an AI generated. But if you guys remember that, I know a few of you definitely do because we've spoken about it since then. But I mean, that moved the market to the downside. So very weird kind of situations going on. And now you're hearing some news that the risk guy at Goldman Sachs is bullish now. And it's like, why? What is changed overall? And I don't think this major sell-off is just because of the tariffs. There is a lot of, tinder all around here, right? And something like this can just ignite all of it, right? And still, even with the market moving up, yields going up, we're back to where we were, which is we somehow need to figure out a way to get yields down to refinance a lot of debt that was generated during COVID at 0.5. The stuff that, Yellen did, that's fine. It's going to be a little bit lower anyways, right? But I mean, I think it's something like 3.2 trillion that originated during very low interest rates environments, and that's going to be a problem, And I think it'll be a problem too for some of the private equity groups, but it's just not as clear what their exposure is to stuff like that. Did they leverage commercial real estate? When do those losses get realized? Maybe that's partly the reason why they're trying to sell private debt. I don't know. It's just, there's a lot of uncertainty right now in a major way. Trump is now threatening 102% tariffs, or, extra 50% at least on China. There's rumors that China's, flooding the market with the 10-year. Who knows, right? But I'm trying to kind of impress upon everyone listening that there's uncertainty that still exists here. Now, I will say, our traders here have been reading the newsletters. I'm actually kind of blown away on some of that stuff. I'm not even kidding. So if you're listening for the first time, you can go to TFNN.com. I mean, I read our guys' stuff today, and it was pretty cool, some of the movements there. But you can check out our newsletters that we have. We have a bunch of things to select from. We're going to have Steve Rhodes on today for Mastering Probability. Really looking forward to hearing from him. Of course, you can also check him out at 11 a.m. Eastern time on TFNN. But this is a tough situation. I'm still pretty much cash, I mean, even the junk bonds aren't recovering as well. They stabilized, so the bleeding's not there, but, not as strong recovery like you saw on the rest of the market. What does that suggest? Folks, stay right there. We'll be right back with Steve Rhodes after the break.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. Let's take a look at what we got going on. You get the SPY trading off 0.58%, but we were just off 0.96%. Apparently, Trump is speaking right now. That SPY is trading at 502.70. Composite off about 0.31% at 15,541. With the Dow Jones Industrial trading off 1.18%, about 400 points to the downside. Heck of a lot better than what it has been doing the past few trading sessions. And the Russell Futures trading off 0.70% at 1826. That dollar ticking up slightly as well. Crude dropping pretty heavily. Now, let's move on right now to our guest of the day. This is going to be Steve Rhodes. Steve is the author of the Mastering Probability newsletter. Now is as good a time as any to catch Mastering Probability. I really enjoy how thorough it is. And honestly, Steve, I think you can hear me right now, show today was fantastic. So I'm really looking forward to hearing what you're bringing to us today. And again, folks, if you want to check out Steve's show, that's on at 11 a.m. Eastern time on our YouTube channel, Tiger Financial News Network. Steve, how you doing?
I'm doing great. But the question I really need answered, University of Florida or Houston? Who's going to win tonight's game?
I'm so biased, but I have to go UF. That's the problem.
Me too. Actually, me too. Hopefully, it's a good game, and in the end, University of Florida wins. So it was a great Final Four.
Oh yeah.
I thought the entire series. So was happy to see that. What I thought we could do today, Jacob, is first talk about the weekly time frame charts. And that's the first chart that I've got on my screen. And here I've got the primary indices that we pay attention to, some which can be traded, some which can't. If we take a look at this core group of 8 weekly indices, if you immediately go to the bottom left-hand corner, you're going to see the semiconductor index. And the semiconductor index, so as you know, one of the patterns that I use to help identify tops and bottoms for any time frame, any instrument, is the TD9 count pattern. It was developed by Tom DeMark. That's what the T and the D stand for. And the way that it works, if you kind of visualize it, you've got to get to a count of a total count of 9. And what it's really looking at, it's looking at momentum. And it's like running a race. You and I have talked about it. You know, you would think that somebody, the fastest runner in the world, could run the 100-yard dash and, be able to not be able to be totally have spent all that energy, but that's not the case out there, and so the market does that same kind of move. And so if you look at the very bottom left-hand corner, you'll see that last week was a TD9 count bottom pattern from a weekly standpoint. And that makes the number of 35, 29, 60 really important, not necessarily during the week, although as long as price remains above that, that would be a bullish signal. But Friday, you need to close above that level. If on Friday price closes below that, then we've got further to go to the downside. The markets have never, the indices have never had a significant bottom without the semiconductors having a bottom as well. They don't have to happen on the same day. Sometimes it can be a couple of days apart or what have you. Now, we take a look at the other indices out there. You'll see that they are going to form bar number 8 or likely to form bar number 8 this week. In a TD9 count pattern, in this case here, we take a look at the bottom. The low must form on either bar 8, 9, or the bar following bar number 9 out there. In the case of the semis, it was the bar following bar number 9. So this tells us that it's possible with us being in week number 8 with the Dow, with the S&P, with the NASDAQ, with the Russell, with the New York stock, with the NASDAQ composite and the transports out there, that we could be seeing a bottom that's actually forming this week. So between this week and the next two. Well, how will we know, whether we're forming a bottom now or not? First, this is really an interesting chart out here, and this is the spot VIX. And I don't really take a look at the spot VIX on a weekly basis that often, but I did pull it up for our review here. Yeah. And what's interesting here, referring to TD9 counts, you'll see that that we are in a bar number 8 this week on the spot VIX index. I had to go. The last time that there was a weekly TD9 count top was the March 2020 low. And you can see that it was bar number 9 that identified, that's on the left-hand side, that identified the top out there. Bar number 8 held. In other words, price never closed above the top of bar number 8. So this is lining up with what we're taking a look at in the weekly charts for the indices out there. And they're suggesting that we should see a bottom. That's between today and really the next 2 weeks out. So how do we try to narrow that down a little bit? Well, the way that I do that is if the weekly is going to form a bottom, we're going to see that first really on a shorter term time frame chart. And what I would start with would be the daily time frame. Here, when we take a look at the same cash indices, what we'll see is primarily A to B equals CD patterns. And we have the same A to B equals CD patterns on the weekly time frame chart. So how do we know when those complete? A to B equals CD patterns complete when bullish reversal candles form out there. That's how we know that the cavalry is at least here. They're going to try to hold their position. And so what we're waiting for these cash indices is a bullish reversal candle. Yeah. Now, the semiconductor index, that's the lower left again on a daily basis, is going to go ahead and form bar number 9 of a TD9 count today. So for its weekly time frame, we have a TD9 count. For its daily time frame, we have a TD9 count. Now, that daily pattern will go ahead and complete tomorrow. It also turns out that we have some other bottoms that have confirmed today. And those bottoms require I typically refer to a bullish reversal candle, a bullish engulfing candle, a bull sash candle, a hammer candle. I really narrow it down to just 7 that provide us with the turn information, the reversal information. But there's also something referred to as a key reversal bar, and that's what's transpired on the daily time frame for the NDX 100. Now, in order to have a bullish or bearish candle key reversal, in this case here, we're going to talk about a bullish key reversal bar, you need 3 distinct things. The very first thing is the market must be in an extending condition. Well, we've got this A to B equals CD pattern to the downside. That qualifies as an extended condition. Number 2, price must trade above the prior day's high and below the prior day's low. Well, that was accomplished today. Okay. And then the third thing that needs to happen is the NDX 100 today needs to close 1 tick above where it actually opened. Now, we could easily get a sell-off between. Maybe we already have a sell-off because I'm just looking at my charts here. But as long as we don't get that sell-off, we close 1 tick higher, then the NDX 100 is giving us a buy signal, a buy the D point pattern, and that's using that key reversal bar. Okay. I think that the Russell 2000 also has a key reversal bar, so that's confirming a bottom. The NASDAQ Composite has a key reversal bar. The Dow Transports have a key reversal bar. So where it's not typical with what people will look at when they're watching me in the show and as I'm reviewing charts out there, where we'd see something as distinct as a bullish hammer candle, here we've got key reversals. So we've got bottom signals on the daily time frame. So the markets are definitely trying to bottom. Any questions about the key reversal bar or anything so far?
Yeah, sorry, what level does it need to close at to kind of solidify that?
So on the cash indices, yes. So specifically, I don't have the charts open, but okay. If you take a look at wherever today's open was, looks like around 16, 6 something or what have you, as long as price closes 1 tick, just one tick to the upside.
Okay.
Because prices got to close the day in the opposite direction of that trend. So as long as there's one little green, as long as today's bar is green for the NDX 100, for the Russell 2000, for the Dow Transports,
sure.
They will confirm bottom patterns. They will confirm buy the D-point bottom patterns today, and the semis are confirming a daily TD9 count pattern. So that's something to look for. Now, all that sounds pretty good. What doesn't sound good? Well, what doesn't sound good right now to me is the fact that the 3 of the 4 daily equity future contracts do not have bottom patterns at all. And typically we would see this too. The Russell 2000 does. So the Russell 2000 equity future contract ticked above Friday's high,
Steve,
traded below Friday's low. I see we're going to break. Yeah,
can you hang in there?
Perfect. You bet.
Folks, stay right there. We'll be right back with Steve Rhodes right after the break.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the 2nd and 4th Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, everybody. We're joined right now by Steve Rhodes of Mastering Probability. Go check out his newsletter. You can do so by going to TFNN.com and clicking that newsletters tab. Steve, before we went to the break, we were taking a look at the Russell, huh?
Yeah, we're taking a look at this. So the Russell 2000 equity future contract of the four is the only one that has that key reversal bar, and so that's confirming a bottom. The ES, the YM, and the NQ are not, and so they are forming bar number 7 today of a TD9 count. So one possibility is that we see a flush to the downside. No idea when that time period might come, but I would suspect it could occur overnight as China and Europe come back on board out there. So that's one possibility. If we can tick below today's low, that will trigger bar number 8 of a TD9 count, and that would then suggest that a pattern bottom, a TD9 count bottom pattern could form tomorrow. Go ahead and complete on Wednesday, and that would then set up the bottom. And you like to have really synergy between the cash indices and the equity future contracts. We don't have that as we speak. Another reason to be looking for a bottom versus a continued move to the downside, in last Thursday and Friday's crash, comes from the spot VIX. And what we're looking at here, so the VIX futures contract is in what's referred to as contango. What's contango? First, if you take a look at the April future contract out here on my screen, you'll see that it was trading at 32.25. Not sure where we're at right now. That was the April contract, well above, even going all the way out to December, what those future contracts are. So when the current contract is traded above all forward futures, we get into contango. That is not a normal position out there. In fact, this is telling us that the issues that we're dealing with in the stock market are short-term oriented. In other words, likely maybe tariff, maybe it's something else. It doesn't really matter. It's short-term. What I can't do on any kind of a chart is I can't go click on the day and try to understand what was going on. There's no news events or anything like that. So it makes pattern trading. Just pay attention to the patterns that are out there. Well, one of those patterns is when the spot VIX has got some really cool utilities. And one of those is when it goes into contango. What you can also see up here is I've got the ES Mini. Then I've got the spot VIX. Then I have what's cool about the VIX, they finally created a product a couple of years ago where they'll take a look at what that 3-month spot VIX index looks like, the 6-month and the 1 year. Now, what I do with those is I create a ratio. That's the difference between the spot VIX and the and then the 3-month, the 6-month, and the 12-month out there. And those are reflected in the bottom portion of these charts. So when price is above the 1-0, that tells us that we're in contango for these time frames. Now, what I've identified on these charts here with these green arrows is when we get in contango, they always form a buyable bottom. Now, maybe it only lasts for a few days, a few weeks, maybe a few months out there. Sometimes they last forever. So you want to be paying attention. Now, when the confirmation from a daily standpoint, or from a confirmation from any standpoint that the bottom would be in, is when that is when the contango pattern goes away. So when the ratio would dip back below 1. So that would be, so we're in this contango pattern that says anticipate or look for some type of bottom. If we look at the New York Stock Exchange, it's advanced decline oscillator. The advanced decline oscillator is nothing more than looking at the advanced decline line. That's panel number 2 on my chart. And it compares the difference between the 39 exponential moving average and the 19 period exponential moving average. When that formula gets us below -150, we are officially in oversold condition.
Right.
So we're oversold condition. We've got contango. We've got TD9 count bottom patterns out there. We've got everything in order for a bottom to form this week. If I take a look at, you had asked me earlier about how, and we've talked about this when we do the Monday segments, how the market is trading in other currencies.
Yes.
So if I switch over now just to take a look at that, this chart is looking at the Dow traded in US dollars, euros, yen, Australian dollars, the Swedish krona, the Great British pound, Swiss franc, Chinese yuan, and the Canadian loonie out there. And in bull markets, or on days when we are rallying, what you want to see is whatever instrument priced in these currency pairs also rallying at the same time. Those form the biggest bear markets. They also form the biggest bear markets, right? If everything is moving to the downside and all those major currencies out there, that's telling you be careful. Now we can see that the Dow earlier, when I took a snapshot of this, in these other currencies, it's at least trying to get about Friday's lows out there. And we take a look at how something is trading in major currencies, this is a chart that shows how gold is trading in Middle Eastern currencies. And if you take a look at it, I left my cursor on the day of the high. And so you see just that little dashed white line, a vertical line that you see out here. Well, here we can see that gold priced in Middle Eastern currencies has topped on the exact same day. Folks, if there's not a be careful signal, I haven't seen one that's larger than this. So it just is suggesting that gold price, that's something positive, at least something positive in the Middle East for some period of time. Maybe there's a glimmer of hope there with gold topping in every Middle Eastern currency at the same time. We take a look at how gold is trading in most of the major currencies. We've got gold trading lower, the only exception being the Aussie dollar out there. Yeah. So gold even priced in those currencies. So it's nice that you asked about it because I could kind of flow into this so that people could understand from a gold standpoint, now is time to be careful. If we look at the gold contract, it's trading below its daily profile. The daily profile formed last week. That's at 30.4960. As long as price remains below that on a daily price, pressure is to the downside. On a weekly time frame, last week completed a Rhodes Momentum Indicator top. We're now trading below, or we were trading below the top of that profile, which is 3,120. If we remain below that, that opens up the door for a move to 29.0280 or maybe even 27.38 or even 26.57. But if I look at the monthly time frame chart, the monthly time frame chart will complete a TD9 count top this month. Again, all this says just be careful. Price should pull back to test support. On a monthly time frame, the support level would be at 28.66 out there. And if price gets below that, it opens up the door for 26.88, 25.54, 24.39 out there. Now, what I think is that we're going to see here is we'll see a flush to the downside in gold to shake out the weak hands out there. Definitely. But what I'm watching for is some kind of pattern to suggest that we've got a bottom. And we do not have that whatsoever when it comes to gold. And we're getting those signals with regard to gold priced in all kinds of currencies out there. So that's what I've got for you for the day. Any questions or anything else that?
No, great presentation again. And folks, if you have any questions, of course, you can just message us in the den. But Steve, we're looking forward to hearing from you tomorrow at 11 a.m. Eastern time.
That sounds great. Jacob, always good to talk to you. Have a magical Monday, and go Gators.
Go Gators, Steve. Thank you so much. See you tomorrow.
You bet. Take care.
Yeah, folks, if you want to check out more from Steve, again, you can check out the Mastering Probability newsletter by Steve Rhodes. Very well worth checking it out. Let's see what we got going on right now. I believe we should be going into a break here pretty soon. Sounds like that's what it is, if that's that music I'm hearing. So, folks, you stay right there. We're going to be right back. Man, quite the volatility. SPY flipping green, flipping red. How about that? Folks, stay right there. Be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds for both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, everybody. I was just joined by Steve Rhodes. He's the author of Mastering Probability Newsletter. Of course, he also has the Trader's Edge on 11 a.m. Eastern Time right here on TFNN. Saw some random posts over the break that Carney is saying they'll remove all tariffs by Canada Day. That is unsubstantiated, entirely. You got to be careful if you're doing like news, like your headline-driven trading here, which I recommend against. There's a lot of fake stuff going on, and again, I would argue that this isn't really. They're not tariffs. Like if they can lower tariffs, whatever those may be, but how is that going to affect what ratio our current administration is using to establish their reciprocal tariffs? So anyway, strange stuff. This is not a market I want to take either side in right now. It does seem like you are getting, at least on the daily, I mean, you're flipping so heavily both ways. But there is this kind of consolidation between 500 and 506 right now, at least for the past hour. That can kind of suggest that we might not, continue to crack. But, I mean, give me a second here. I want to look at the corporate bonds because I've been kind of looking at these are junk bonds. But see, I mean, they're crashing even more, right? So, I mean, you get this stabilization in the high yields, and that was decent. It gives you a floor. But, I mean, if you keep cratering in the high yields, I mean, that can really indicate that this movement lower is not, entirely done with, right? Now, some things that I will say that I think are a little bit interesting are, for instance, right? I mean, you're getting things like NVIDIA. And NVIDIA is kind of at these lower levels. I mean, we're knocking 100 right now. But I mean, you're trading up low 90s and stuff. That's not a horrible spot for NVIDIA to be in. And again, I don't necessarily want to add too much right now. But if you're thinking of holding for something on the long term, it just makes more sense for my situation to be a bit more liquid right now. But kind of appealing at that number, right? Tesla, what we were seeing the other day before we really got some major sell-offs on a certain bounce, was the only things moving to the upside were these big meme stocks, right? And you're not necessarily seeing that. Now, Tesla is up a little bit from its low of the day, but it is not recovering like, as well as things like NVIDIA, which I find very interesting. Lucid being up so much is very interesting to me as well, up 5.26%. That is fluctuating very rapidly. Palantir up as well. Now that is a little bit memey, but it has gotten a little bit more wide-scale acceptance. And then GME. GME's, I'm going to wager, probably burned. It's up 1 point. That is actually unbelievable to me. People are starting to buy GameStop as a hedge against U.S. uncertainty because they bought Bitcoin. Of course, we've spoken about how that's probably not the best way to do that. Yeah, what an insane market. I mean, really flipping quite heavily. Yeah. On the NVIDIA note, it seems so. I'm interested where I feel like we might reach some kind of bottom, and again I don't think we're out of the neck of the woods, or excuse me, we're out of the woods yet. You might see some bounce up coming in, but listen, I mean the systemic issues still exist. The debt's still there, yields are still high. We have no idea how these kind of tariffs are going to kind of play out. I mean, they could be inflationary. I think we're in stagflation to a certain extent now. You have Goldman Sachs saying we might be in a recession anyway. This is just a really tough market to take a side on, I think, even though I am generally bearish on all this right now. Some equities that I'm really looking forward to that I would like to get into. So I'm reading the Den right now. And if you're watching this and you're not in the Den, listen, it's $1 a year. It's our Discord server. This has been on fire all day. Fantastic constructive conversation. Just check that out. It's $1. You got 4 steps. You just follow it down there. But let's take a look. I'm very interested in MP materials right now. Part of the counter tariffs, the true reciprocal tariffs that China has just put on us is regarding the export of rare earth materials. You have MP up 2.78%, kind of attractive price for it right now. They produce the neodymium. If what Trump is doing pays off, and again, that's a big if, and we're just thinking here, then he brings some kind of manufacturing back. It's not going to be like the Model T lines. Like, these people you're not going to have humans working in it, or at least that's not going to be a permanent solution. It's just impossible to do that, right? Because you'd price everyone out. So you build robots to kind of automate it. And robots that have articulating arms are going to use neodymium, and MP Materials is the only company, at least in the US, pulling out neodymium from the ground and processing it. So this is a very interesting trade for me. Rockwell Automation also is kind of attractive price target wise, especially since that's red today. These guys are the players, and you're at a 28 PE. And if you're talking about revamping American manufacturing, automating it, Rockwell is going to be at the heart of it. There's not really other people that are going to do as well of a job, and these guys are in the S&P 500. They are entrenched into American society. It's a name you actually don't hear too often, but I think it's very attractive once this kind of settles and we see if what Trump's doing with bringing back manufacturing works out. Additionally, CCJ, I think, is attractive at these levels. And again, I still think you have some downside here. And we've obviously seen today how volatile everything can be. But you're trading back down to that double bottom that we had earlier last year. Late last year in August. You basically had a bottom there at 35.38 and then about 35.96. Well, listen, we're right there. And I think this is on a long term, a very attractive equity. And then additionally, one that I'm watching as well is going to be U. And these guys are working with Chemours essentially to build out supply chains in the US for the critical materials. This is where I'm conflicted with all of this, right? I mean, obviously what's going on is unprecedented in a major way, and it's causing vast disruption. One of the things that I've spoken about on this show a few times is the potential for one of the presidents to come in and try to establish supply chains in the US. And why is that? It's because of what we saw during COVID, right? COVID was a major issue, not just because of the virus spreading through the population, but because we had international supply chains and the globe shut down, right? I mean, you saw that being a massive issue, namely, I remember this one sticks in my head, of pharmaceuticals, right? So is there something to be said about trying to at least build more of the supply chain in the US? I think overall, that is an interesting concept, and maybe it is something we've spoken about. Is this the way to do it? I think you guys know my kind of position on this, but this is, super fascinating. Other companies I'm looking at are AIoT, that's Powerfleet, and again, this is predicated on Trump basically getting his plan to work. These guys do IoT, artificial intelligence. When you're talking about factories and how these kind of sensors work and SCADA systems and everything, that is all Internet of Things. These are single-use kind of computers. Again, they do one task. Sitting artificial intelligence on it is very interesting. And then additionally, build out these data centers. TSSI, Oh my goodness. I think this is a very appealing, I think that number is wrong, but this is a very appealing equity, and they knocked it out of the park with earnings. Unfortunately, bad general market conditions for this company to release such good earnings. Folks, stay right there. We'll be right back with a short segment.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, everybody. We got the SPY trading off 0.56% at 502.38, so really holding above 500. And the composite trading off about 0.44% at 15,520, with the Dow Jones Industrial trading off 1.2%. Those Russell futures also trading off 1% at 1821. You get the dollar ticking up 0.44%. I think tomorrow will be the most probably interesting day. You know, why the market didn't sell off, if the reason for the rebound in the morning was that fake headline. I mean, is there the chance that people still don't know it's a fake headline? I'm not sure. I tend to, wow, look at this like reversal right now. I mean, this is just, it's gonna give you a whiplash to try to trade this thing. That is pretty amazing. Let's talk a little bit. It seems weird to talk about like business-specific risks right now with everything going on. But you have, MicroStrategy trading off 8.10%. Expects to report a loss for the financial quarter. The Bitcoin company is notched to $5.91 billion in unrealized losses on the digital assets for the quarter. Should result in a net loss for the quarter, despite the income tax benefit of $1.69 billion. I mean, this is going to be an issue with every... And MicroStrategy is just pure Bitcoin maxi exposure, right? That is going to be an issue with GameStop. It is going to be an issue... This is insane, by the way. This is going to be an issue with Tesla, okay? Anyone that's been using Bitcoin in the past to prop up their earnings are going to get smoked in this situation. And consider this, right? I mean, what is Bitcoin trading at right now? You're off 6.89% right now in Bitcoin. When the markets recover from this and liquidity flows back in, do the big guys buy and pump a bunch of Bitcoin, or do they get things like Broadcom? Do they get things like Meta, Nvidia, tech companies with reasonable growth rates, decent amount of cash to debt, cash to operational expense? This is something you got to consider if you're looking at stuff like that. Folks, thank you so much for joining me. We'll see you tomorrow morning, 9 a.m. with Tommy O'Brien for the morning market kickoff. Take care.